Alrighty, good morning everyone. It is Thursday, April 7th, 2022, and we're going to get started here with our pre-market on the S&P 500. Real quick, I just want to take a look at the daily chart, and then we're just going to jump right down into the important levels that we want to pay attention to this morning. So, from this slightly zoomed out perspective here, we are retracing the leg now. So if you remember a few days ago, I said I didn't really want to draw the major fib up there until we actually got an appreciable pullback. And so I threw it up there last night, and we are coming right down into the 38 retrace of this push out from this double bottom we made back at the beginning of March. So just from that perspective, want you to keep in mind where we are in terms of this retracement. Another thing to note here is we've got some very bearish stuff going on. Obviously, don't really need to point it out. It's been pretty obvious sell-off here for quite some time. Now, I want to point out that back on the 29th of March, we did talk about a potential weekly bearish divergence forming up there off the high, and the daily was also showing a potential bearish signal. And again, from there, what 46.29, we're now down 200 points in a matter of about a week and a half here, or whatever it is, 2 weeks. So again, I emphasize seeing those daily divergences, paying attention to them, because when you catch the right move, it can go for a pretty long push. So just emphasizing that bearish divergence off the highs. Outside of that, on this daily chart, not much else to say other than I'm still eyeing this pocket down here right around 44.11 down into 44.06 as a really ripe region that I would expect to be tested here as things if things continue to sell off. So let's go down into the intraday time frames and just start looking at all the important levels we want to pay attention to. Um, there's one thing that I'm noticing coming into the open here, and that is the fact that we do technically have a bearish divergence from our overnight high on almost every time frame all the way up to our 4-hour chart. So we don't see it necessarily on the daily. In fact, on the daily, what I'm seeing here is we might have an argument for a bullish divergence from yesterday's low there because of what I'm seeing on RVI, but we need to wait for today's candle to form and close before I can actually say anything, because this could be a false signal. So don't really want to talk about that. But on the 4-hour, on the hourly, and on basically all the shorter time frames, we're seeing a bearish divergence from that overnight high. So just keep that in mind. What is that telling us? That's telling us if we stay below it, then our expectation is either for sideways chop or for a continuation lower this morning. If the bulls get strong and they pop through there, and again appreciably get through and hold above it, that's going to be a clue to get stronger for the bulls, keeping in mind that we still have a whole lot of scaffolding up above that we got to get through. So on the 4-hour, just want to point out that we broke through the top structure zone up here around 45.20. I think we had an eye level at 45.13 there. Finally got through, and yesterday we sold off and came right down into the next major support and resistance or structure zone down here, right around 44.50. And we're going to get down into that because there are some really good trade examples. In fact, I'm going to go ahead and make a little interlude here and go down to our 512 chart, and we're going to take a look at what happened here yesterday, because it was really couldn't really have worked out any better. So let's go over to the open here. So we held our eye level up at 45.27. We sold off. We came into 44.74.50 in the pre-market, came up, and then when we were rejected from the 200 right out of the open there, in fact, that could have been a trade that you took within about 30 seconds of the open. That thing just shot down. We got in short. We got in short again, right off the fast moving average, right off of 44.74.50, our expected support zone, and got short, and this thing just continued going. And look at where we bounced. 44.54.50, one tick in front of the major eye level. Again, that is this over here on the 4-hour chart down here. You see it came down right into 54 quarter or 54.50, one tick in front of the major eye level, our shaded zone of expected support, and we came all the way back up And I want to show you here, we actually rejected. Where did we reject? At our next expected, and the cool thing about yesterday is we came down, we held 54, came back up, we held 44.67.75, our minor eye level. Okay, it chopped around sideways for a really long time, and then eventually came up, rejected from 74.50 once again, 2 ticks in front, came back down to the range, bottom of the range, came back up, and then look what the high of the day was. I think it was the high of the day. Let me go back here. Yeah, on both occasions, right into our next expected resistance. So we had 74.50 to 77, and then right up into that 44.96.75, 97.98 area. So we came up and rejected just in front of it, came down, didn't actually hold 54 that time very nicely like we did the first test all the way back from just after the open back there, but came up, and then the high of the day was right in that shaded region that we expected to be the next resistance zone. So going back over here, what was 96.75? That was this little region right in here that we had shaded. And again, that was just about, let me just zoom out here so we can see, just about one of the smaller structure zones that's down here that is not marked. But I just want to point out we came down through the first region, came down again right into 54.50, 1 tick in front of that zone, came up right into that 96.75 level I was just talking about, came down, and this is absolutely amazing. I want to show you this as well. So we came down, we peaked through the major support and resistance level here, but look at where we peaked down into, right into 44, 45, 50 here, which was our next expected support zone. So we held 54 quarter, we bounced up, we held 96.75, and then we pulled back and we held 45.50 almost to the tick. And it's much clearer to see when you look at it here on the tick chart. So holds 96.75, pulls back, there's 44, 45, 50, breaks it like 2 or 3 ticks, comes back up, holds 96.75 zone again, and then pulls back and goes sideways into the open there. And you can see that, or into the close. So in our overnight session here, we're still chopping around within all that garbage that basically was our range from yesterday. So going back to the 4 hour, I forgot to review that right at the open, but it's good that we kind of interspersed it here with the 4 hour chart, because now you can see how well these levels work basically down to the tick. So we came down, held, pulled back in. Now on this 4 hour chart, we're stuck within this structure zone. So if the market starts to continue to sell off, what are we targeting down below? Let's look at the 4 hour once again. If we come down and get through that structure zone, we have that little peak below at 44, 45, 50. If that breaks this morning, we are targeting right down into these pockets that I have highlighted. So, long-winded way of saying that the low of yesterday, once it breaks, we want to target down into 44.15 to 44.11. That would be that first little area, but keep in mind that the major swing is down here at 44.06.50. So there's always a potential that even though this level might hold for a small bounce or for an appreciable bounce, that zone down at 06 also looks pretty tasty, and it's only about 5 or 6 points from the first. So that would be that first major zone. Keep in mind, we do have a minor level in between over at 44.31 quarter. But again, then it comes down into 44.15, 44.11, and 44.06.50. So those are the three major levels right in that little zone there that I'm going to be targeting if this does sell off. And then a little bit further down, we're going to be right into 43.97, which is that next major structure zone. If we go back up to the 4 hour here, that is this major structure zone right here, or major support and resistance right around this area. So that's what we're looking at below us if things break this morning. Again, if the overnight low breaks, we've got this pocket 44.15, 44.11, 44.06 right there. If that breaks, I'm targeting our next major eye level again right down there at 43.97. and then there's a little bit of a pocket below it that would make sense for us to find support in. Any further than that, we're going to start traversing into the new structure zone down here where we have 43.81. We have the major swing at 43.67, and then we have 43.61 and 43.48. Once all those zones break, we're down to the bottom end of that whole structure box right there, which would be 43.24 with a swing high at 26.75. So those are all the little areas down below that we're going to target if the bears continue to sell the market off. Remember, again, we have multiple time frame bearish signals from that overnight high. So the expectation would be for that push to push to new lows. However, anything's possible. So if the bulls do end up jumping in, we've got to adapt to the market. And if that level breaks this morning, that will be our first clue that maybe we want to jump on the backs of the bulls to go for this push higher. So if that happens, what are we pushing up into? I'm going to skip going over the structure zones on the higher time frames. Let's just look at what's down here on the 60-minute chart. So first things first, in the overnight session here, we did pull back and pushing up through the first orange power level. Very, very important thing. And then obviously 50% of the previous day. These would be our first two clues if it's nice and strong that maybe there was going to be some type of rotation in the market, and then getting through the overnight high would be another confirmation. Just keep in mind that we've got a whole bunch of stuff that we're pushing up into, and so the expectation is really for this to continue to head lower. So let's see what we have here. We've got the major swing here at 45.01. We've got the next major swing up at 45.0775. And then we're back up into a whole bunch of relevant levels. We've got the major dividing line, 45.13. We've got the 50% retrace of the entire sell-off sitting right here at 45.1650, 45.1675. And then a little bit further, we're right back to that area we talked about yesterday as being important to stay below for the bearish case. So that is still in play there, 27, 31, and then the 61.8 itself is at 33.50 there. So that whole little pocket is, in my opinion, another trouble zone for the bulls. If they end up pushing through that, what do we have? 45.46 region, 45.55.50 region, 45.66, and then we're right back to 45.74 to 45.77. Again, basically a little pocket here as well. So that's what we have this morning. Again, just looking back to yesterday, if we were to retrace all this stuff, rejected off of our eye level here, came down into this expected support, bounced out, came down right into our next expected support, got a minor bounce, pulled back right into our next expected support, bounced out, rejected from our expected resistance zone, chopped around in it, and then eventually came down and held our next expected support zone, and came up and held our expected resistance zone, and now we came down, held our expected support zone once again, and held our resistance zone once again, right? So what's going to happen this morning? Who knows? Maybe it could come up into that one, reject, and start coming back down, maybe into 45, and then keep going. But there's probably a million different scenarios we could play with. So keep in mind, those are the levels that are going to be the most important this morning. If you don't trust me, just look at the results of the last 6 months. So have a great day. We'll be back on Monday for the larger time frame perspective. Hope you have a great trading day and a great weekend, and I will see you guys on Monday. Take care.